Yes, people, a very happy to all of you. So, guys, we're starting with a brand new chapter today, which is chapter number 6, Accounting Procedures, Rules of Debit and Credit. You guys might be wondering, sir, last class we completed basic accounting terms, which is basically the chapter 2 of your textbook, TSL textbook, from 2 directly to chapter 6. Yes. In between, we have chapter number 3. We have chapter number 4 and chapter number 5. Chapter number 3 talks about the accounting principles, accounting conventions, accounting concepts, etc. Those concepts, if I discuss initially, high chances are that you might not be able to understand it. For you to understand those accounting concepts, conventions, and principles, you have to first understand how the entire accounting system works. In that, there are a few accounting concepts and principles which I'll take simultaneously when I do each and every chapter. Then there will be certain accounting concepts which I'll be taking only at the end of the 11th so that you understand the entire accounting concepts and principles. Chapter number 4 talks about the basis of accounting, accrual basis and cash basis. This will be combined with chapter number 8, which is journal. So when I do journal with you, that time I'll be teaching you what is basis of accounting. Chapter number 5 is your accounting process. This is a topic which is supposed to be learned somewhere you are midway through 11th or at the fag end of the 11th is the right time where you can actually understand the accounting process, how it works. Sorry, accounting equations, right? So now from chapter 2, if I've jumped to chapter 6, trust me, with the amount of experience that I have, with the amount of batches that I've taken in the past, I've set a right procedure out. If you follow these steps, what I'm doing now, if you go in the same order, you will feel the entire subject very comfortable. For me, you are not the mouse batch. You know what is mouse? Mouse in the laboratory, before they develop a medicine, they test that medicine on rat, mice, mouse. My mouse batch is over. 2019-20 mouse batch is over. I have a proper procedure in place that what after what I should take so that you get a complete hold on the accountancy subject. So keeping that in mind, people, we are starting with this brand new topic by name Accounting Procedure, Rules of Debit and Credit. Mark this chapter. Very important. For a second, forget today's dinner, forget tomorrow's breakfast, forget tomorrow's lunch, but do not forget this chapter. This is the basics. This is the base foundation based on which the rest of the 11 standard chapters, your entire 12th chapter is relied on. This is that base without which you can't construct a strong building. All of you must have heard that when you're constructing a building, it is very important that your foundation should be very strong because the entire load of the building is there on the foundation. If the foundation is not strong, the building will not be able to withstand that pressure, stress for a longer period of time. Same way, this entire chapter is your base, where rest of the 11th chapter and the 12th chapter is relied on, dependent upon. If I have to relate this, I relate this to very concept that you've studied or learned in your first grade or second grade, or probably LKG, UKG. That was the very first time when you were introduced to mathematics. In mathematics, the very first thing that you learned is numbers 1, 2, 3, 4. Yes or no? Yes, online people, yes or no?
Yes, sir. Yes, sir.
Yes, sir.
Gradually, as you climb the ladder, which means when you came to the higher grades, you were taught what is the significance of addition, subtraction, multiplication, division, percentage, fraction, etc. Most of your mathematical calculation is revolving around these fundamentals and basics. If these were not taught to you, if you were not aware of these basic concepts of mathematics, you will not be in position to calculate the complex mathematical problems. You will not be in position to solve the complex mathematical problems. Certainly, yes or no? Yes or no? Yes. In the same manner, this very chapter, the debit and credit chapter, the rules are the basics for the entire accounts. Like how these are the basics for mathematics, likewise, this entire chapter is the basic for the entire other chapters that you're going to study in 11th and 12th. Any problem? Are you able to understand the significance of this chapter? The weightage that I'm giving, very, 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 very high. Sir, if you feel that this chapter is very important, what are we going to learn in this chapter? We will try to first of all understand what is the meaning of account. Second, we'll try to understand what is the meaning of debit and credit. I'll ask you what is the meaning of debit and credit, to which none of you will be able to give me the right answer. Open challenge. Then we'll try to understand the various rules of debit and credit. We have two rules. One is golden rule, called as traditional approach. Second is modern rule, called as American approach. So I'll be introducing all of you to both the rules. In some schools, or very few schools, they teach both the rules. In rest of the schools, either they try to teach only this or only this. Very few schools, they try to teach both. We have to study both. We have to study both. But modern rule is the one which we are going to use in the rest of your 12th. That is in the entire 12th standard. We will never apply golden rule. We will only apply modern rule, because golden rule is useless. It is outdated. In today's scenario, there are so many transactions which you can't account keeping golden rule as a base. How it is useless? Why aren't we able to apply the complete logic of this? I'll be giving to you, not in today's session, in the upcoming classes. And this difference between golden rule and modern rule, it is my challenge. You will never ever get to hear from anyone. If you're learning from any CAs, the latest who are updated with all this, then maybe yes. Oldest CA might as well not know this. Right? So definitely I'll be giving you some light, and you'll find this very fascinating. Then we'll try to understand what is the balancing of account and what is significance of debit credit account balance. Not that much important, but this is the main important part. What is the meaning of debit credit and the rules of debit credit is the major heavy lifting that we'll be doing in this chapter. Now, the name of this chapter is accounting procedure followed by rules of debit credit. So before I start our discussion on debit credit, first of all, let's have a discussion on what is accounting procedure. Procedure means what? Can you give another name for procedure? Process. So first of all, let's try to understand what is accounting process. How does it work? What is the system here? Let's try to understand. Before that, I have a question to all of you. When you started your educational journey, probably playgroup, pre-KG, LKG, UKG, and onwards, you were taught for the very first time certain alphabets called as English alphabets, which is A, B, C, D, etc., etc., etc. So my son is currently in LKG. So he was introduced to ABC when he was studying in pre-KG. Now, as you climb, the level of the English will start getting more complicated. So what is the process of learning the English language? What is the process of learning the English language? Yes, wonderful. First process was to learn alphabets. In the initial years, you were taught how to learn alphabets, A, B, C, D. As you climbed up the ladder, as you went to higher grades, you were taught how these letters have to be combined together to make beautiful words. Then you're introduced to words. Later, as you climbed up the ladder, teachers taught you how these beautiful words could be combined together to make some meaningful sentences. Once you became a little bit more big, then the teachers taught you how the sentences could be combined to make paragraphs. As you climbed the ladder, you were taught that how multiple paras put together, by organizing them in a proper way, how could you create a complete chapter? Once you start forming the series of chapter, you learn the art of creating a book. That's how you become an excellent author. Correct? This is the step-by-step procedure of gaining a command over English language. In the same manner, we also have to go through an accounting process. We have to go through a process, step-by-step process. This step-by-step process will lead you to not book. The step-by-step process that you follow in accounting, at the end, will lead to you one stage where now you can say where you can say now the accounts has been prepared, which has got some true and fair representation of the data in it. So we have to understand what is a complete accounting step-by-step process. So let me skim you through the entire accounting process. Accounting is a systematic process. It's not just a random process. Systematic means what? There's a system in it. What do you mean by system? Something which is done in a very organized manner. Something which is done in a very meaningful manner. Something which is not done in a haphazard manner. What is haphazard manner? Haywire, here and there, chumma, for sake of doing something you're doing. No.
Improper manner.
Entire accounting is a system. There's a procedure. There's a process in it. And the process is not chumma, any random process. We have a proper systematic process. Meaningful step-by-step procedures. Accounting is a systematic process. And this process involves multiple stages. Like how learning alphabet was one stage. Learning words was another stage. Sentences, another stage. Para, chapter, all another stages. So like that, we have multiple stages involved. Here in the accounting, the very first stage, a step begins with identification. Identification of what? Identification of business, financial transaction and event. For you to record any entries in books of accounts, for you to do accounting, what is your first step? You have to identify, you should be able to identify a business financial transaction or a business financial event. If you are not able to differentiate between transaction and event, if you are not able to understand what transactions is, you are not in position to do the accounting entries. Sir, what is the meaning of transactions? We have studied what is the meaning of transaction long back. When we did the basic accounting terms, I said transaction means what? Exchange of goods or services or money or both. Exchange of goods, service or money or both, in which one party is going to be business and another party is going to be the third party. So there are two people. One is business, one is third party. Between them, what happened? Goods are exchanged for money, services exchanged for money, or just money is exchanged. This is called as a transaction. So anything that happens between two people is transaction. Any problem here? So you are supposed to identify that for me to record this entry in my books, there should be a transaction, and this transaction should be with business. I am business. I am X. There is some transaction happening between A and B. Will I record that in my books? Who am I? I am X, Mr. X. I want to do accounting in my books. There is one transaction happening between Mr. A and Mr. B. Will I record the transaction in my books of accounts? No.
No, sir.
Why did you say no? Because you identified that this transaction does not belong to us. So what is the first step? Identification of the transaction. Whether this transaction belongs to some other party or me. This is the first step. If you have any problem with this, let me know. If you have any problem with this, let me know. I'm coming one by one. Transaction pehle dekhte hain. BFT means business financial transaction. In that, I've explained what is transaction. If you're clear with this, now I'll teach you what is financial. Then I'll teach you what is business. Then combining, I'll tell you what is BFT. Then I'll teach you what is event. Then combiningly, what is business financial event, I'll teach. First of all, you tell me, transactions, are you clear or not? Anything that happens between two parties, is transaction. In that one party should be business and one party should be another party, third party, second party, whatever you say. So are you clear with transaction? I want a yes or no in the class. I don't want anybody to stay silent.
Yes, sir.
Yes, sir.
Ask a question.
Yes, sir.
Yes, sir.
If I don't answer, how will you feel? Then tell. Those who are not saying anything, I'll do one thing. I'll make you experience that pain. That you ask me something, I will not respond. Not once, 10 times. Then I would want to register your reaction. Correct? No? It's a basic human courtesy to respond to the other party. Okay? So are you clear with the transaction part?
Yes, sir.
Okay.
Yes, sir.
Is every transaction recorded in the books of accounts? The answer is no. Only those transactions which has got some financial value to it, some monetary value to it, that alone I'll be recording in the books of accounts. So can I give an example? There is one party by name A. Who is A? A has come to my business to attend interview for what job? So I have a vacancy. I want to hire somebody for marketing department. I want to hire one employee for marketing department. He attended the interview. At the end of the interview, he got selected. And I gave him one letter called as offer letter. So whenever you go for a job, you'll be getting the offer letter from the company. Or when you are doing business and you want to appoint somebody, you will give offer letter to the employee. So employer is business, gives the offer letter to employee to accept his offer for joining the employment, which is the job. He gives the offer letter. This offer letter is signed by both the parties. Who is signing? Employer, businessman is signing. Employee, that staff is signing. Both of them are signing. Is this a transaction or not? I told anything that happens between two people.
Yes, sir.
I'm coming. This is a transaction. Means what? Any type of activity happening between two people is a transaction. But this transaction, can I capture in my books of accounts? Can I pass some entry? Can I record something here? No, because there is no financial value attached to it. For me to pass a journal entry, I need to have a value. For me to prepare profit and loss account, I need income in value. I need expense in value. While giving the job, there is no expenses. When will the salary expense come? When Mr. A is working in your business for 1 month. After that, you are supposed to pay that salary to him. That salary is what I'll record. But when I'm joining somebody as an employee, that is a transaction, but I don't have a financial value to it. So therefore, I can't record it in my books of accounts. So every transaction that happens between the business and the third party is not captured in the books of accounts. I am in search of which transaction? Financial transaction. That transaction has got some monetary value attached to it. That is what I'll record in my books of accounts. That is what I'll capture in my books of accounts. Okay, not okay? Okay, sir. Online people, okay, not okay?
Okay, sir. Yes, sir.
Now, after this class, I feel very tired. I want to do some entertainment. So what I do is I go home, have nice dinner. I take my family to movie. Okay, I go to theater. I buy ticket. Not Ambani ko daily home theater. Now, I go to theater. Today, not daily, today. I'm not going, only for example sake. Poor fellow. After going home today, you know what is my routine? Tomorrow morning, interclass. I have to sit and prepare notes for it. My life is not that entertaining. What you're thinking? Now, anyways, coming back. Don't feel sad for me. It's okay. It's my routine, my fate. Now, imagine I'm going for a movie. Feel happy for sir. No? Smile. No? I spent 1,000 rupees for movie ticket. Members are more, no? One ticket, how much? 200. 5 members? Now, middle class family, 200.
Choice of theater.
Brookfields. 200 sufficient. 5 member in the family. 1,000 is fine. Okay. After this, tomorrow utruvangla. Interval popcorn will come. Again 1,000 rupees gone there. 2,000 rupees. Middle class family will do a little bit less expenditure. Now coming back. Please tell me, is this a transaction or not?
Yes, sir.
100% this is a transaction. This is a transaction between two party. I'm giving money. In it, I'm getting ticket. Ticket is a access to watch movie. Watching movie is a service given by the theater. So theater owner is giving service. I'm giving money. So exchange of services for money. Pakka transaction. Second condition, I said there should be a monetary value. And the monetary value is how much? 1,000 rupees for ticket alone. Yeah. So this is a pakka financial transaction. Can I tomorrow morning come to my business and write expenses 1,000 rupees? Can I record it?
Yes, sir.
Can I record it? Wrong.
No, sir.
Wrong. Why? Because this is not business transaction. Watching movie has got something to do with my business. No. If I go and watch movie in the theater, will I get 2 extra students tomorrow? Tell me. No. So this is a financial transaction, but happening in my personal life. It is not happening in the course of the business. This is not happening for the development of the business. Imagine I'm taking my client students to theater. You'll put Instagram story. Looking at that story, more people will come. So that money which I pay to the theater for buying tickets for you my clients, customers, vendors, suppliers, for what? Development of the business. Here I took my family. Looking at my family's Instagram status, who will come and join to me in academy tomorrow? Nobody will come and join. Correct? No? So every financial transaction we don't record in the books of accounts. We are in search of business financial transaction. We are recording in the books of accounts. We are recording the transactions in book. Which transaction? That which is happening in the course of business, which has got monetary value. And this should happen between two parties, in which one should be business, another should be third party. So we are in the lookout of a BFT. So if I give you a question, in that question, if it is a BFT, then you record, or else leave it. Or else leave it. Okay, not okay?
Yes,
No energy. Okay, not okay?
Yes, sir. Okay, sir.
Is it financial event? I told you two examples of event. First of all, what is the meaning of event? Result of transaction is event. Result of transaction is event. I am purchasing 10 mobile phone, selling 6 mobile phone. Remaining is how much? 4 mobile phone. This is called as what? Closing inventory. Or I call this as remaining inventory. Should I record the remaining inventory in my books or not? Yes. Why? Because I own it. Anything that I own at the end of the year, I should record it. So the journal entry what you pass for closing inventory is not a transaction. This 4 mobile phone is not a result of a transaction. It is a result of 2 different independent transactions, which resulted into an event called as remaining 4 mobile phones. Purchase was a separate transaction. Sale was a transaction. 2 separate transactions. When I combined it, 10 minus 6, when I combined it, it became event, result of the transaction. 10 I purchased, 6 I sold. Remaining is how much? 4. Remaining 4 is not a transaction. It is a result of 10 minus 6, which is 4. That is called as event. What is one more example of event? Profit is one example of event. So I earned 10 lakh rupees as sale. In that, my all expenses put together 8 lakh. So remaining 2 lakh is what? Profit. This profit you're supposed to record in the books of accounts. So this is not a transaction. Is profit a transaction? Are you buying the profits from somebody in future? No. So this is the result of the sale transaction and expense transaction. So here, the calculation of profit is an event. So this event we have to capture. So transaction is different, event is different. Transaction means what? An activity which happens between 2 people. In that, one is business, another is third party. Event is not a transaction that happens between 2 people. Event is a result of the transaction that already took place. That also I need to capture. So we are on the lookout of what? BFT and BFE. If BFT, then record. If BFE, then record. If it is personal financial transaction, no record. Business transaction, no finance, don't record. So when I give you a lot of transactions, you should be able to understand which I should take for recording, which I should leave it. So first step of accounting process is what? Identifying a business financial transaction. On what basis will you identify a BFT? On the basis of source document called as evidence. Every transaction that you record should be supported by evidence. Transactions are recorded in the books of accounts. Transactions, which BFT? I didn't say BFE, because for event there is no evidences, because it is result of transaction. So there is no evidence possible. But transaction means what? Something happening between 2 parties. Either one is business, second is third party. So when something happened between 2 people, there will be some evidence to it. Every transaction are recorded in the books of accounts based on evidences. No evidence, you can't record it. No evidence, you can't record. Samil, now you might be asking a question. FFLA, I am the owner. Fortune's Fund Learning Academy, I am the owner. In my business, I know what transaction I'm taking off. I mean incurring or I'm entering with. In my business, I very well know with whom I'm entering the transaction, for what value I'm entering transaction. Then why the hell should I produce evidence to you? Why? Tell me.
So we should
Why
pay
should I
tax.
give evidence to you? Sorry.
So we should pay tax
Okay. Can you a little bit more elaborate? You're heading towards the right direction, but I want more elaborate explanation.
for showing the government.
Showing the government. Show it. No. Why evidence is required to government? Why does government need evidences, boss?
Tax evasion.
Tax evasion. Very good. Correct. Now I'll tell you. I'll just elaborate what he said. Let's say the income of my business is 15 lakh rupees. The expenditure that I incurred is 8 lakh rupees. So what is my profit, people? What is my profit? 15 minus 8 is how much?
7 lakhs.
7 lakh is profit. Now, all of you know that on the profit, you're supposed to multiply tax percentage. Imagine the tax percentages. Imagine 30. Since he said 30, I'm taking 30. Or else I would have taken 10 only. But 30 is fine. Or do I do 10? 10? 30? Okay. He wants to complicate his life. No problem. So what is the tax that you're going to pay in rupees? 7 lakh into 30%. And 30% solid amuchi paycheck ano? 7 3s are 21. 7 3s are 21. 2 lakh 10,000. Not 10% or 30%. For 7 lakh profit, I have to pay 2 lakh 10,000 to government as tax. Who will have the heart to pay this tax to government? Nobody will have. So back then in old days, what people did, no? People tried to manipulate this profit. How can you manipulate the profit? Two ways.
They show less
Reduce
profit.
income. Income is 15 lakh, but on purpose, I'm showing only 3 lakh, 6 lakh, 7 lakh. Reduce income. So automatically profit will reduce. Or increase expense. Increase expense. So here people did what, you know? They started increasing expenses. So now what they did is, where my real expenditure is 8 lakh, what people did is they recorded 14 lakh as expenditure. 14 lakh rupees as expenditure. So expenditure increased by how much? 6 lakh rupees expenditure increased. Now tell me, what is the revised profit? 1 lakh. What is the original profit? 7 lakh. Revised profit? 1 lakh. Profit increased or decreased? Sir, if expenses increase, profit will decrease. So decrease by how much? 6 lakh. What is my revised tax amount? Same 30%. 30,000 rupees is my tax. Decreased by how much? 1 lakh 80,000, which means on 6 lakh, if you multiply 30%, you get 180. So 1 lakh 80,000 tax got reduced the moment I shot up my expenditure. Now, what audacity is got that is increasing the expenditure by 6 lakh rupees. Why that audacity got? Because he thought nobody will come and check. So when people knew that there is nobody going to check what I'm doing, they started taking advantage of that. Later, government gave me the rules and regulations telling that nothing doing. Now, if your business crosses a particular limit, your accounts tax has to be scrutinized by an independent chartered accountant. And he will completely scrutinize your books of accounts and he'll give us a report. That's how the birth of CA happened. One of the big objective of CA is what? To do what function? To do audit function. Lovely. To do auditing function. Auditing means what? The process of checking accounts is called as auditing. Independent CA. Independent means what? There is no influence of that business person on that CA. In my business, I will appoint one CA and he should be that CA whom I can't influence. Because if I can influence him, then there's no point of having him as a CA. No? So you want an independent CA. When he comes for scrutiny checking, what will he check? Oh, sir, 15 lakh income. 14 lakh expense. Aha. Now he will tell, please give me the bill for all this 14 lakh expenses. This bill will serve as evidence. Now, when I produce the bill, I'll produce the bill only for 8 lakh. Because 8 lakh is genuine expenses. Only for genuine expenses, you'll have bill. For fake expenses, you can't have bill. You will say, we will create it, sir. We know how to check that also. In audit, we have one more department called as forensic audit. How many times you have seen the movie? There's a crime scene. There's a crime scene. In the crime scene, they'll say, forensic department will come and investigate. He will come, put the powder, zoom, 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 poof. Then he will check and see, fingerprint is there. How many movies you have seen? That is what? Done by whom? Forensic department. Like that, if you're trying to play with the bill, we will bring forensic department and audit. So you do this, I'll catch you like this. You do that, I'll catch you like that. For everything, we have a solution. So now here, I openly said, sir, I had bill of only 8 lakh. Extra 6 lakh I cooked up. Why? To reduce profit. Why did I want to reduce profit? To reduce tax. Please help. Please help. Correct? So now tell me, how much important is evidence? If you are a government, for income tax department, for you, how much important is evidence? Because if evidence is not there in place, people will try to take advantage of that and try to show inflated expenses. And thereby the profit reduces and your tax collection ability will reduce. That's why we say that all the transactions are recorded in the books of accounts on the basis of evidence. These evidences are the source document. Based on this only, you'll be able to identify whether this is a BFT or BFE. So for you to identify a BFT, looking at this evidence, you'll understand, acha, this is purchase transaction or sale transaction. This expense is what you've done. Is it purchase expense or other expenses? Based on the transaction, based on this evidence, you'll be able to identify whether this is a transaction to be recorded or not. Example of transactions: purchase bill, sale bill. Bill is also called as invoice. So we have purchase bill, sale bill, debit note, credit note. What is debit note, credit note? I'll be discussing when the right time comes, not now. Any problem here? Online people, any problem here?
No, sir.
Sorry? No, income and profit is different. I'll tell you what it is. Income and profit is not same. Income means what? I'm getting income from multiple sources. Income is before minusing expenses. Profit is after minusing expenses. Income is before minusing expenses. I get income from coaching business. I get income from fixed deposit interest. I get income from share market. So all the income put together is called as my total income. From total income, I minus total expenses to get what? Total profit. So income is before minusing expense. Profit is after minusing expense. Tax is paid always on the profit, not on the income. Correct. Taxes on income is called as income tax. Now, this profit as per you. For the income tax department, this profit is the balance income. See, profit is for us to understand. Why profit separate? Now the question what is asking is, sir, if the tax is calculated on the profit, then why do we say income tax? Nice question. Now, for us to understand the difference between income and profit, they give two different terminology. Income means what? Before reducing expense. Profit means what? After reducing expense. So that we can differentiate, we can understand. But for income tax department, this profit is what? Your income, which is coming after minusing taxes, after minusing your expenses, no boss. So income minus expenses, balance income. This balance income is given a new name called as profit. So the tax that you pay on this profit is nothing but on the income indirectly, no boss. That's why the word is income tax. The tax that you pay on the income is called as income tax. About this in detail, I'll discuss when I do GST with you. Coming back, what is your first step of accounting process? Identifying a business financial transaction and event. Wonderful. Next. Second step is measuring in terms of money. Sir, I want to know the monetary value. Sir, what nonsense, sir. Already you said financial year. So financial year means monetary has been decided here only, no boss. Here itself we know what is the monetary value. The answer is no. In some cases, you will not get to know the exact monetary value here. Sir, example, sir. When we do business in India, there are some business which does only domestic sale. Means what? They supply the goods only in India. So when you sell the goods in India, in return the money that you get is in INR. INR is currency. INR currency means what? Indian rupees. IN rupees. Indian rupees. Currency. You have something called as USD. US dollar. You have something called as Australian dollar. Canadian dollar. Japanese yen. Got it? Some business entities does only domestic supply. So when you sell the goods in India, in return you get the currency in INR. But can you prevent the people of India to do business only in India? No. So there are some business entities who does international business, which means I have the privilege to sell my goods overseas. I can sell it to Australia, I can sell it to America. So in return, when they pay me, they will not pay me in INR. They'll pay me in US dollars. Likewise, when I buy, I will buy from India. If I find the products that I'm buying is cheap in some other country, I'll buy from that country. Example, China. We have so many China products. Why? Because Chinese cost of production is very less compared to Indian cost of production. So the cost of product here, if it is 10 rupees, there it is only 4 rupees. That huge difference it is. So therefore, we try to import our goods and raw materials from foreign countries. So please tell me, I purchased goods from India worth 1 lakh. Worth 1 lakh. I purchased goods from India. So I have to pay in what? INR or foreign currency? INR. Further, I purchased $10,000 of goods from USA. If I ask you what is my total purchase, can I say you will say 1,10,000?
No, sir.
No, sir. No, sir.
Tell me. If I ask what is the total purchase, will you add and say, sir, 1 lakh INR plus 1 lakh 10,000 US dollars put together 1,10,000. This is my total purchase. Will you say?
No, sir.
No,
Why?
sir.
Because the unit of measurement is different.
INR.
We have studied in lower grades. kg can be total with kg only. You can't total kg and liters. You can't total add up two different measurement. You can't add up two different units of measurement. For you to add something, the unit of measurement should be same. Unit of measurement should be same. Yes or no? Loudly, loudly, yes. Similarly, if you want to add up two things, INR and INR could be added. US dollars and US dollars could be added. This both I can't add it. In this, any one I should convert into a common denomination. So in India, all the foreign currency should be converted to INR. So 1 USD, that is 1 US dollar is equal to how much rupees today? For convenience, I'm taking 80 rupees. 80 rupees, which means if I have to make the payment of $10,000, I should have $10,000 in pocket, no boss. I want to make payment to my party sitting in USA. He will accept the payment in what? Dollars. I don't have dollars. I have INR. So now I have to buy the dollars so they can pay him. So please tell me, to buy $10,000, how much should I spend? Very simple. So to buy $1, you need to pay 80 rupees in INR. Therefore, if you want to buy 10,000 US dollars, how much you're supposed to pay?
10,000 divided by
$10,000 into 80.
Sorry, 10,000 into
How much?
8 lakh.
80,000.
8 lakhs. 10,000 into 80 is how much? 8 lakh. So 8 lakh in rupees if I give, the agent, the foreign currency agent, he will give me how much? $10,000. So in the same manner, in books of accounts, I need to convert this into INR. So this 1 lakh is already in INR. Now this dollar I need to convert into INR. So I'll multiply with the dollar exchange rate. I'll multiply dollar exchange rate. How much it is? 8 lakh. So 1 lakh is the domestic purchase. 8 lakhs formally is the international purchase. Both put together, how much? 9 lakh is my total purchase. So now the second step teaches you how do you measure this finance? How do you measure the monetary terms? How do you measure in monetary terms? So you should have a monetary value, very true. And the unit of measurement should be common, which is INR. So what is the first step of accounting process? Accounting is the systematic process of identifying a business financial transaction or business financial event. And that transaction, what you're about to record, should be measured in terms of money. And that measurement should be INR. Imagine if this step was not there, then what will people do? Some people record 1 lakh and some people record 10,000. INR, dollars, everything they'll record in accounts. So it becomes a complete khichdi. Who said? Is it okay if I answer this question at the end? Because this question has got nothing to do with the thing, but I want to answer this, but not now, at the end. Just remind me at the end. Correct, no? In my accounts, I record INR, USD, Australian dollars, Canadian dollars, everything. If I record, it becomes a complete khichdi. I'll not know what value is what. So it is very important to put this, what you call it, process into picture, that everything that you're dealing with the foreign currencies, you can't record. The foreign currencies what you're dealing with should be converted into a common unit called as INR. That was compulsory involved here. Any problem here?
No, sir.
Now, once you achieve the two steps, the third step is recording through journal or subsidiary book. Now, this is the very first stage where you begin your practical step of accounting. This is where you start actually doing the accounting, recording through journal or subsidiary book. So, accounting is a systematic process of identifying a business financial transaction in event. Second, measuring in terms of money. Third, recording through journal or subsidiary book. What is journal? What is subsidiary book? In depth, I'll be discussing when I do a separate topic called as journal topic and separate chapter called as subsidiary book. Journal is a separate chapter. Subsidiary book is a separate chapter. Now, in this step, what are we going to do? In this step, what are we going to do? Sir, when I'm recording this through journal, what all steps I have to take care of? Recording in journal can be done or can be achieved only if you are aware of two broad rules of debit and credit. One is called as golden rule. Second is called as modern rule. So, in the very chapter where I begin, I said that in this chapter, you will be learning the rules of debit credit. And I told you there are two rules of debit credit. One is golden rule and modern rule. So, unless and until you're aware about this rule, you cannot commence your journal entries. You can't commence your accounting. So, the first step of journalizing is to know what are the rules of debit and credit. So there are two broad rules of debit and credit. One is called as golden rule. Second is called as modern rule. Golden rule is also called as traditional approach. Traditional approach. Name itself says what? Olden approach. And modern rule is called as American approach. American approach. Any problem? Online people, any problem?
No, sir.
No, sir.
No, sir.
Now, what are the steps involved in journalizing? This I'll be discussing in depth when I do journal, but I'll just give a glimpse. The first step is to identify the accounts involved in BFT. So, for you to identify the accounts involved in BFT, first of all, you should know what is BFT. So, if you don't identify a BFT, you will not be in position to identify accounts in BFT. So, that is why what is your first step? Your first step is to identify BFT. Once you identify a BFT, in that BFT, you have to identify next what? What are the various accounts that are involved? What are the various accounts that are involved? For example, I'll give an example. We are business. We purchased 10,000 worth of chair, or let's say worth of laptop or chocolates from Ram for selling. For this, we paid cash immediately. We purchased 10,000 worth of chocolates from Ram. For what purpose? So that we can sell it. My intention of buying chocolates is not to consume. My intention is to sell. And for this, we paid the money immediately. Now, please tell me, is this a BFT or BFE or nothing?
BFE.
Sir, this is a 100% transaction. This transaction is taking place between business and third party ka name? Ram. This transaction is taking place between business and Ram, third party. So this is a transaction. Finance, in this finance is involved. Finance means what? Money. Is money involved? Yes. Is this happening in the course of business? Yes.
Yes, sir.
I'm buying the chocolate with intention to sell. So this is my core business activity. I'm doing the chocolate business. So this is a BFT. Wonderful. Once you identify business financial transaction, you have to measure in terms of money. Now this 10,000 rupees what you paid is in INR or US dollar? Ram is in India.
INR.
Rupees 100. So this is in INR. First two step successfully done. Third step. In this transaction, you have to identify how many accounts are involved so that I can record them in my books of accounts. So
3
identification.
accounts.
How many accounts involved?
3 accounts.
Involved. 2 accounts involved.
So
One
three
has
accounts,
to
sir.
record purchases. Why? Because purchases are my expenses. Expenses help me to reduce income, and that in turn help me to reduce taxes. Because if I record expense, my income will reduce. On that reduced income only, you'll calculate taxes. So recording expense in business is very, 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 very important. So this pakka will record, sir. Okay. What else will you record?
Cash account and RAM account.
RAM account I'll not record because I already paid the money to RAM. When I'm making the payment to the party, why the hell should I remember his name? Tell me.
Then two accounts, purchases and
Because
cash.
he's the other account.
You will not remember Ram. When will you remember Ram, you know? When do you remember God? When you're in trouble. When you're in trouble. You should remember Ram here only if you did not make the payment now. Because Ram is my creditor. Who's the creditor? Liability. If I have to make the payment to Ram in future, I have to record his name in my books of accounts. Why? Because after 1 month, I have to make the payment to him. Here, am I making the payment to him after 1 month? No. I'm making the payment right now. So once the payment is made, do I need to remember his name? Not required.
No,
In
sir.
business, I make the payment to 1,000 people. Will I sit and capture their name in my books of accounts? If I do so, the books of accounts will be very huge in size. Unnecessary complications. So we will not do all that. So I will not want to remember Ram ka name. Chocolates. He said, sir, do we need to record the chocolates? You will not record the goods in the books of accounts now. When do you record? You know, at the end of the year. 10,000 chocolates you purchased. 9,000 sold. How much not sold? 1,000 not sold. That is my BFE. Business financial event. That event I'll record at the end of the year. So closing stock you record not now, at the end of the year. Events are recorded always at the last day of the year, 31st March. Whereas transactions are recorded on day-to-day basis as and when they incur. So goods you will record not now, at the end of the year. You will see totally throughout the year how much chocolate came, how much sold, what is remaining. For remaining alone, you'll record. That is easy, no? Every single time goods are coming, you record. Every single time goods are going out, you record. Your burden is too much. In short, what is my closing stock? Stock unsold at the last day of the year. So count whatever is the stock left at the last day of the year, that you record. Game over. So this made our life more simplified. So the two accounts that will record is purchase and cash. Purchase I need to record. Why? Because it is my expense. Helps me to reduce my income, thereby reducing my taxes. Cash, why I need to account for? Why? Because when I
We are
started
paying.
the business, I started the business with 1 lakh rupee cash in hand. Out of that, how much is paid? 10,000 paid. How much balance cash in my hand? 90,000.
90K.
Can I say this 90,000 cash in hand is my physical cash? Always
Yes, sir.
the physical cash should match with the cash which is there in the book. In book, your cash is 1 lakh. Physically in your pocket it is 90,000. Is it right? No. In physical, if cash reduces, book also cash will reduce. So for that, I have to capture the cash outflow, no boss. When money came in, you said this is cash inflow. 1 lakh money came inside the business, cash inflow. When money goes out, that you have to minus, no boss. For that, we are capturing cash. So you have to learn the art of identifying the accounts involved. It is not easy. In a transaction, which account I should identify, which I should not identify, that comes through practice. That comes through conceptual explanation. My explanation is going to make your life easier. Without explanation, if I tell you this is the transaction, just buy out these accounts, you are not screwed. You are royally screwed. Not just in 11th. Like how your seniors are suffering in 12th. Like this, you will be screwed. So understanding the accounts is very, very important. So I give a logical reason why I need purchase. Why I need cash. Purchase is needed because I need to book my expense. Expense is important in business because it helps me to reduce my income. And income, in turn, reduced income in turn helps me to reduce my taxes. And cash is important because I need to match my book cash with physical cash. So once you identify the accounts involved, what did you identify? Purchase and cash. Now you have to apply the rule. Which rule? Either golden rule or modern rule. And you have to classify the nature of accounts. You have to classify the nature of accounts. One second. So purchase is what classification? Purchase is what classification? Always all accounts, you will be able to classify under 4 category. How many category? 4 category. expense or loss category. I call this as 4 quadrants. 4 quadrants. Every account, you take any account, is my challenge. You will be able to classify them under 4 categories. First category is expense or loss category. Second category is income or gain category.
Gain.
Third category is liability
Debit.
or capital category. And the fourth category is asset category. It is my challenge. You take any account, you will be able to classify them under any of these. Can you do a rapid fire? Purchases, what classification? Purchases. Expense for the business. Expense for the business. Sales. Sales.
Income and gain. Income or gain.
Salaries. Expense.
Liability.
Hey, salaries.
Yes, sir.
Salaries. Expense.
Expense.
Salary you pay, ma. Oh, you are thinking from job point of view. I go to job. We are doing accounting for business, not for the employee. So for business, salary paid is
Expense. Expense.
commission paid, expense, rent paid,
Expense.
interest received.
Gain.
Interest is income, not gain. Income. There's a difference between income and gain. I'll discuss when the right time comes. Land and building.
Asset.
Land and building.
Asset.
Very good. Online people also answering. Very good. Land and building asset. Plant and machinery.
Asset.
Creditor. Say asset.
Liability.
Say asset. This liability. Who are creditor? Ram. In our example, this example, you purchase goods from Ram. Imagine you're not paying cash now. In future, anything that I pay in future is liability.
Liability.
Ram here would have been called as creditor.
Creditor.
So creditor is liability. Debtor. Asset. Investment. Asset. Cash in hand. Asset. Bank balance. Asset. You take anything, you ask anything, everything and anything will be classified as any of these 4 items. So as soon as you identify the nature of accounts, you are now supposed to classify the nature of accounts. Once you identify the accounts involved, you're supposed to classify the nature of accounts, whether it's asset, liability capital, income gain, or expense loss. Once you classify them, now you'll apply golden rule and do the decision whether this account should be debited or credited. Or you'll apply modern rule and then decide whether should I debit or credit. So the purpose of this golden rule and modern rule is what? To decide which of these accounts should be debit or credit. Should I debit this or credit this? If you want to know that, you will get to know only that from the golden rule or the modern rule. Without this rule, you can't identify what I should debit and what I should credit. So once you classify the nature of accounts, apply the rules of debit credit, either golden rule or modern rule, to decide which account I should debit and which account I should credit. In this process, you follow a system called as double entry system of accounting. What that is, I'll be discussing. And all these transactions you record on the basis of evidence. Without evidence, you can't record. This is called as recording through journal.
Petty cash is done.
Everything I'll discuss, not now. When the right time comes. We are discussing accounting process. Accounting does not end with journal. Journal suffers with a significant problem. All of you have completed journal in school?
Yes, sir.
So somebody is completed. You tell me, what is the fundamental problem with the journal? What is the fundamental problem with journal? Tell me. Journal not started in school? Okay. Those who started, or those who started, you tell me. What is the problem with the journal? Journal is like this box. I give you multiple colored balls. Blue ball, red ball. I tell you to throw everything in this bucket. So which means, can I say this bucket will have purple balls? This bucket will have orange balls. This bucket will have green balls. This bucket will have light blue balls. This bucket will have black balls. This bucket will have pink balls. This bucket will have red balls. In accounting, what these balls are? Account, cash, purchase. Cash is one ball. Purchase is another ball. Bank balance is another ball. Sale is another ball. Interest is one ball. Salary is one ball. I put all the ball in one common place. That is called as journal. That is called as journal. You record all the transactions one after the other in a chronological order. As and when the transaction, what is chronological order? As and when the transaction takes place, you record one after the other. If I ask you in this, how many red balls are there? Will you be in position to tell? Can you tell? You can tell, but you will take your own sweet time. First, what will you do? Go and search for red ball. Then all the red ball will pick. Then saying out, oh, okay, 5 red balls are there. Till that, will your boss wait? Your boss will tell, give me what is my total purchase for the entire year. Tell me what is the total purchase of the entire year. Tell me what is the total sale of the entire year. Tell me what is the total salary paid to employee for the entire year. What will you say, boss? Wait, boss. One by one, I'll check and tell you. For that, you'll take 1 month. For 1 month, will your boss wait? He will chuck you out. He will tell, bring that accountant who studied from CA.Prathik, sir. With great difficulty that CA has come. You can't take your own speed time. Instantly, the answer should come. The fundamental flaw with the journal is that it does not help you with the totaling. If I want a total of something, I can't get the total. So the problem with the journal is it does not facilitate totaling. Therefore, for totaling purpose, all these balls are shifted to one place called as ledger. This is nothing but you create multiple color bucket. Purple balls will go into purple bucket. Orange ball will go to orange bucket. Green balls will go to green bucket. So what are you doing now? You're doing classification. You're trying to classify all the accounts separately. You're trying to segregate. Okay, this is my purchase. This is my sale. This is my cash. This is my bank. This is my salaries. You're trying to bifurcate. You're trying to bifurcate. So this is called as classification. This is called as classifications. Are you able to follow? So once you record the transactions in the journal, you classify them through ledger. What is the intention for your classification? What is the intention for your classification? To do the totaling. So ledger is going to facilitate the totaling. One second. Ledger is going to facilitate the totaling. Now what happens? All the green balls is coming in the green bucket. Now how many balls are there in green bucket? 3 balls. So we say this 3 put together is the total purchase. We have 4 ball in the purple bucket. All this 4 put together we say it is purple. I mean for all 4 balls we say put together is total sales. This is total cash. Like that we keep on saying. So if anybody asks me what is the total purchase, instantly looking at the ledger you can say this is my total sale. This is total purchase. This much money came in. This much money went out. You can give a better explanations looking at the ledger. Journal could not help you with a lot of information. So if you want the detailed information in the business, you would look up to forming ledger. Once ledger is done, you will summarize all this data using trial balance, profit and loss, and balance sheet. So accounting is a systematic process of identifying a business financial transaction, measuring in terms of money, recording through journal, classifying through ledger, summarizing through trial balance, trading and profit and loss account, balance sheet. Once you summarize and get these 3 data, you say now your financial statement is ready. What is financial statement? Financial statement is nothing but the report card of the business. This statement comprises of multiple documents. In that one document will be your trial balance. One will be the trading and profit and loss account. Third will be the balance sheet. All this data that you put together is called as financial statement, now called as report card of the business. With this, your accounting does not end. Sir, financial statement is ready. You want P&L, that is ready. You want balance sheet, that is ready. Through this, you can evaluate the financial performance and position. What more you need? I need analysis. As an owner, as a banker who's given the money to you, as an investor who's given money to you, I want to analyze the business. So the next step of accounting is to do interpretation or the analysis of the financial statement. All these are thoroughly analyzed. Why analysis is done? You'll understand this in 12th standard. Because in 12th standard, we have multiple analysis statement called as accounting for ratio analysis, cash flow statement analysis. These both you have in 12th standard, plus tools of financial statement. In that we have comparative common size statement analysis. Comparative common size statement. These two are the tools again used to analyze. All this you'll study where in 12th. Sir, are these the only tools for financial analysis? No, you have more to it, which you'll study in the financial, higher courses such as CA, CMA, ACCA, CFA, etc., etc. In that, you will study more tools of analysis. Now, once you analyze the data of the financial statement, your job does not end here. Whatever analysis you've done, you have to prepare a report of that, and you have to communicate that information, that report, to the users of the financial statement. You have to communicate that to the users of the financial statement. Okay, not okay? Okay, sir. You have to communicate that to the users of the financial statement. Who are the users of financial statement? Investors. Financial statement is a document in which I have the data of the business. Who is interested? Whoever is connected to the business, directly or indirectly, they are interested. First person who is interested. First person who is interested. Users of financial statement. Owner. Bank. Investor. Employee. Lender. That is bank. Banker. Creditors. Government authorities. Public. Customers. All these are directly or indirectly connected to your business. These people are interested to know some information about your business, and that will come to them only through financial statement. Financial statement is the result of the accounting that you do. So once you complete accounting properly, only then financial statement is prepared and ready. So please tell me, what is accounting process? So accounting is a systematic process of identifying a business financial transaction or business financial event. Second, measure in terms of money. Third, recording through journal. Then classify through ledger. Then summarize through trial balance,
profit and loss,
balance sheet. Then
analysis of financial
or interpret the financial statement. Then communicate the
information,
analysis or interpretation that you've done to the users of financial statement. This is the complete end-to-end accounting process. Very, very, very important. You cannot forget this till the end of 12th. If at all you're doing CA by any chance, till you complete CA, you can't forget this. And by chance, if you complete CA also, till you die, you can't forget this process. So this is the end-to-end accounting process. Yes, boss. One second, before that. This entire process is what you're going to study in the entire 11th standard. Journal is one chapter. Ledger is one chapter. Trial balance is one chapter. Trading and P&L account preparation is one chapter. Adjusting them is another chapter. Analysis, 12th standard, another chapter. So this is what we're going to study in the entire 11th and 12th. Yes, now you can tell me. Yes. Why should we add those 10,000 books in our section? Now, the question what you're asking is with regard to this 10,000, my suggestion is we'll not do that right now. Why? Because the intention of today's discussion is only to discuss few things. Now, this 10,000, how we should record, what to record, what not to record, all this in depth we'll be discussing in upcoming sessions where I'll give more clarity. I had to discuss this transaction with you now to make you understand what is BFT. In BFT, how do you identify accounts? To give you some clarity on that, I had to give this example. But I have a lot more to discuss here. So my humble request is that if you have any more further questions associated with this transaction, please keep it to yourself for some time, because immediately when I come to the end of this chapter and when I do the next chapter journal, it is my 100% assurance. All your doubts will get absolved in it. I will not give you a chance to have any doubts in your mind. That is my promise. But till then, little bit bear with me. Everything will be taken care of. Because in the last 7 years of my teaching journey, I know as a student what queries you have. So all that query has been already getting captured in my teaching process. So you will have 99.99% no doubt left in your mind. That is my promise. I will send it. I'll send it. No worries. Yeah. So there's more to it I've added. So this now I'll be sending in the group. Later on, this document will be visible only in application, because whatever documents that I'm preparing extra notes will be there in the applications. So as of now, until you get access to application, I'll be sharing the WhatsApp group. Later, I'll be sharing it in the application. All of you get the access to application. Now we're not done. Please concentrate. Yes.
So we are recording sales in sales book, profit transactions in software book.
Yes.
Why do we need that?
That's what I'm telling you. If I come to the respective chapters, I can make you understand in a better way. Now the questions what you're asking is all premature question. You understand what is premature baby? If a baby is there in mother's womb for 9 months or more, we call this as a normal full baby. If the mother is delivering the baby before 9 months, let's say in 7th month or 8th month, we call that as premature delivery. We call that premature baby. Now the question that you're asking is premature baby question. Why? Because my 9-month process of teaching has not been completed. You have to give me at least 1 more month where everything I'll be discussing in an order. I know as a student you have a lot of questions, but taking them all of them in one shot will lead to a lot of confusions only. Allow me to take everything in a systematic manner. It is my promise. I'm telling you. At the end of the 11th standard, I will make you an accounts pro. 11th standard accounts pro. How you have iPhone Pro, you'll become accounts pro. And the knowledge what you possess, it is my guarantee. Take it from me in writing. It'll be 100x more than your friends. Guarantee. Please allow me some time to teach everything in a systematic manner. Let's come back to this topic. Transactions are recorded in the books of accounts on the basis of evidences. If evidences are not there, people will tamper with income and expenses. They'll do on purpose fraud, forgery, manipulation, window dressing. What is window dressing? 8 lakh expenditure, I made it 14 lakh. This is called as manipulation. This is called as window dressing. Means what? I'm trying to cover a few things to reduce profit. No doubts I'll take. All doubts, everything noted down in textbook. And it's my promise. Whatever you noted down in textbook, the doubts automatically get solved. Transactions are recorded in books of accounts on basis of evidences, that is source documents such as purchase bill, sale bill, debit note, credit note, etc. Once you identify business financial transaction measured in terms of money, now you have to record the entries through journal. For recording the entries in journal, you have to follow some step. What is the step involved? Identify the accounts involved. Purchase account, sale account, cash account, RAM account, etc. Then classify the nature. Then apply the rules of debit and credit. That is what they're telling. Once you identify a transaction and start recording it, you have to apply rules of debit and credit. Rules of debit and credit is applied to each transaction and then are recorded in the book of original entry called as journal. Now what they did here, they said transaction means here. From transaction directly where did they jump? Apply rules of debit and credit. In between, so many processes are there. No, who will discuss all that? That is what I discussed. So here very coolly they said, once you identify a transaction on the basis of evidence, apply the rules of debit and credit and record in the journal. In between, there are so many things to be done. No, that is what I explained. So initially I did not read this paragraph is because without understanding the complete process, you will not be in position to get a complete hold on this particular subject. Now, what is this paragraph saying? On the transaction or in the transaction, identify the accounts. Classify the nature of accounts. Apply the rule of debit and credit on each transaction so that we can record them in a book called as journal or in a book called as subsidiary book or special purpose book. Another name for subsidiary book is special purpose book. And both of these books are called as book of original entry. Book of original entry. Journal or special book or subsidiary book. This is called as book of original entry. This is called as books of original entry. What do you think is the difference? Singular, plural.
Single book.
Journal is one set of books. Subsidiary is multiple set of books. This is a separate chapter. This is a separate chapter. Now, if you ask me, sir, what is the difference? Please tell. Can I tell now? Not possible. But I can tell you why journal or subsidiary book is called as book of original entry. Original entry. What is the full form? Original entry. Now, why this is original entry, I can make you understand. What have I highlighted? Origin means what? Starting.
Starting.
We are what origin? We are Indian origin people. Our origin is what? India. Means what? We originated from India. Originated means what? Starting point. So the starting point of accounting is what? Journal. Very first place where you do the accounting in writing, journal. Identification of business financial transaction. Did you do any writing there? No, everything happened in the mind. Measuring in terms of money, mind. Recording begin where? From the journal. Practical step. The first practical step of accounting begins with journal. That is why this we called as book of original entry. Original entry. This is the originating point. Anything and everything in accounts begins and ends with journal. Means what? When I record a transaction, I record it through journal. If that is wrong, and if I want to correct it, I will correct it through journal only. When did you find there's a mistake? When I prepared a balance sheet, I found out there's a mistake. Can I correct the mistake directly in the balance sheet? No. Anything and everything that you want to correct, again you have to come from the scratch. Come where? Journal, ledger, trial balance, P&L balance sheet. So if there is any mistake in P&L and balance sheet, on the face of the P&L, on the face of the balance sheet, you can't take a pen and correct. Not allowed. Accounts does not permit. If you want to do any alteration in the balance sheet and P&L, for that again you have to pass a rectification journal entry. And for that we have a separate chapter called as rectification of errors. Sir, for everything you are saying there's a chapter. Welcome to 11 CBSE accounts. For everything there's a chapter. Which means journal is like a feeder. You know what is a feeder? Have you had this sugarcane juice? Sugarcane juice. They have that one machine. No sugarcane juice. Never you tried? You don't like the taste. Oh, thank God. Even I don't like the taste. But there is one near this mall, no? Brooksville Mall, opposite that road where we park the two-wheelers. And you take a left. There's something called as Karumbu Kada. Karumbu Kada. If you want, you can try and see. Now, how the sugarcane is crushed? There is one roller machine. There is one roller, and between that between that they'll put the sugarcane and they'll crush it. And what comes out? The extract, the juice extract comes out. Correct? Now, what they did is they've covered a box. Why? Because there's a lot of flies that'll come and sit inside. No, so to protect, what they did is they put a box on it. So today, all the modern shops who are preparing sugarcane juice, they don't have this machine open. It is covered with the box. And in the box, there is a opening mouth. That is called as feeder. So now the sugarcane sticks are fed into this feeder. Through this feeder, the sugarcane stick goes inside that machine, gets crushed. This is the feeder. Origination of the juice extracting process. Like that, the journal is the feeder stage. Which means anything that I have to enter into accounts. If I want to enter into accounts, I can enter only through journal. And if I want to make any changes in the entry that I've done, I have to again come back and go through this one. You have to go through same line. You can't bypass and go directly in the balance sheet. Okay, not okay? So, journal is called as book of original entry. And special purpose book is called as books of original entry. And all the transactions in this are recorded in the chronological order. What is the meaning of chronological order? Step by step, in an order. Today morning, 10 a.m., if I drank a tea for 10 rupees, I record this first. Then after that, I purchased one goods for 10,000 rupees means next transaction I'll record this. Then at 1 p.m. I had lunch. For this, if I spend 50 rupees in business means that 50 rupees I'll record next. So as and when the transactions are taking place, we will record the entries. Don't take in literal sense. All I'm trying to tell is that today's transaction, record today. You don't record tomorrow. Today's transaction, you can record in any jumble order. This 10 rupee first, 10,000 second, everything we can change order. The only rule for the chronological order is that today's transaction record today. You can't record tomorrow. Tomorrow's transaction record tomorrow only. Don't record day after tomorrow. So that day's transaction, recording that day is called as recording in the chronological order. Okay, not okay. Only 5 minutes, I'm done with this topic. Topic means this paragraph. The transactions recorded in the book of account are transferred, means posted to a specific account called as ledger. From journal, what do? We shift all the transaction to a place called as ledger. The process of shifting the transactions from journal to ledger is called as posting. What is it called as? Posting.
Okay.
Why are we preparing ledger? Because the format of the journal does not facilitate me total. So for totaling purpose, for classification purpose, I will take it to the next stage called as ledger. In ledger, you prepare one thing called as account, which is T-shape format. What is account? I'll be discussing in the next class. So today, what did I discuss with all of you is the entire process of accounting. This process, if you say, is 100% understood, I'm able to envision it, I felt it, you are lying. You can't understand what I said today. To feel it, you have to do entire 11th with me, because each and every stage is a separate chapter. In that, I have a lot of things to tell you. So only when I tell all those points, you'll get a complete feeling of the end-to-end accounting process. The accounting process, what I just said, is a complete outlook, summary, outline, circle I discussed. Inside what drama happens, we're yet to see the picture. The reality of the accounting is yet to be seen. Now tell me, do you have any problem so far? Yes.
A person shows the expenses as 14 lakhs, but it's actually 18 lakhs.
Correct.
Doesn't CAs actually show that the expenses are more to reduce the taxes?
Now the question what has been asked is, sir, actual expenses 8 lakh, but you're showing 14 lakh rupees. Now, does CA support you or help you in the journey of showing that remaining 6 lakh as dummy expenses? That's what your question is. Ideally, a CA is not supposed to do that, because that amounts to forgery. But yes, there were cases in history we find that auditors did join hand with the business to manipulate. And if you look at the history, there are a lot of CAs who've been debarred from the CA Institute, who's been prosecuted, means they've jailed for the activities that they've done. So if any CA is found, aligning with the business to do any window dressing, manipulation, and if found out by the government later, the CA might as well face heavy consequences, not just from the department, also from the CA Institute. So ideally, this is not allowed. This is a violation of ethics. So if any auditor helps in window dressing of the client, it's purely violation of ethics, and severe consequences the auditor has to go through.
What about the business?
Business will be taken care by the government. So after GST, there are a lot of frauds that has been done cumulatively by CA as well as business. That is what the case shows, the case that has been filed, on the basis of which they have debarred the CA or they have prosecuted the CA or the businessman. They say, this is scam, 14,000 crore scam, 10,000 crore scam. It's all resulting to this. It's because of this only. Yes. Okay. Just give me time. I'll just winding up the video here. Online people stay back. Offline people stay back. Just 2 more minutes. I'll discuss with you. So guys, that's all from my side for this session. I'll see you all in the next class. One more thing. Saturday evening will not have class. Instead, I'll take your class on Sunday. So Saturday's class I'm cancelling. I'm taking it on Monday. Sorry, not Monday. Sunday, 10 a.m. to 11:45 p.m. 10 a.m. to 11:45. Yes.
Okay.
AM. So Saturday evening class we will not have. Sunday morning class 10 a.m. to 11:45 p.m. Not 4 p.m. Sorry, 11:45 a.m. You'll have it. Right? So yes, people, that's all from my side for this session. I'll see you all on Sunday morning 10 a.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, sir.
Don't go back. Stay back.
Thank you, sir.
Thank you. Online people, recording people, thank you.
Thank you, sir.